let's touch on that inflation number, 5.3%. And just yesterday, we were talking about a possible interest rate cut in South Africa. Do you think that is likely, given the fact that we're just 0.7% away from breaching that target?
I think in the short term, I don't think so. I think that we'll have to see where global markets go, and if the states come out with something over the weekend and they start to push the markets back up and got quantitative easing, and it gets the economies going and there is growth, I don't think we'll see a cut in those interest rates. So if they do nothing about it and we start to slip into recession globally, then maybe we'll have a cut. But I think for this year, we're pretty confident that we won't have any cuts in interest rates.
Well, let's just take a look at the core inflation number. I alluded to it, coming in at 4.3%. Should we be focusing on that number? We're right in the middle of the target band. Is that going to be the focus for the South African Reserve Bank Governor?
Definitely we're taking a look at where we are on the inflation number, but I think that global growth is more important, and if global growth is starting to come right and a little bit of growth coming through, I think that will be the first place to be looking at. So I don't think that the core inflation number is something that you'll look at directly. I think the global recession at the moment that's happening around the world and the slowing down of the Western economies is more important.
A slew of corporate numbers out today as well, Rob. Let's touch on BHP Billiton. Very strong set of results. We saw profit increasing by around 62%. We also know that the Petrohawk deal is officially concluded. Give us your sense with regards to BHP, because we're seeing this happening to Anglo American as well. We're seeing aggressive selling of both of these stocks, but from a valuation perspective, they're looking very attractive.
Yes, from valuations, they're looking really good. And from the amount of cash and profits that they're generating, they're looking very good. I mean, operating cash flow for Billiton was $30 billion, and with a gearing of only 9%. So the company's got a lot of cash. It's finished its buyback of its shares, so really sitting in a very strong balance sheet position at the moment. And they do see a little bit of slowing down in China, but they reiterated that the iron ore is looking really positive, and metallurgical coal is still looking very positive into those type of areas. And they're confident long term that there will be a solid growth coming out of Asia, and that's India as well as China. And even though there is monetary tightening in those areas, over the long term there should still be very good and solid growth there. So I like Billiton, I like Anglo American as well. I think the valuations of where they are now are good value for a long-term portfolio.
So in other words, Rob, I can assume that you're actually accumulating both of these shares.
Well, you try when the markets are very weak to try pick up some quality blue chip stocks in a portfolio and look at them again in 3 to 5 years. Yeah. So as a long-term investor, you would be looking at these type of levels.
Yeah. Let's touch on Imperial, also out with results. A very strong set of numbers. We saw profits increasing by 38%. Revenue was up 21%. The market seems to not really be taking to the numbers. It's down 1.7% at this stage. We also know that it's going to continue with acquisitions. What is your sense?
Another company with a very strong balance sheet. Their car sales were up about 21%, which is better than the industry average. So good car sales, and they say going forward that those car sales will come down slightly. So I think maybe that's where people are a little bit worried that how quickly will those new car sales come down. But in general, the company's cash flush, looking for acquisitions. A little problem in their cold chain division on the logistics side. But generally, the company very well managed, looking very solid. And these lower 100 levels, between 100 Rand and 105 Rand, also looking really solid going forward.
Let's touch on Blue Label, also out with results. We saw an increase in revenue of around 13%. We know that it's increasing its geographical footprint. It is currently operating in India as well. Point of sales are starting to improve. Do you think that this company is going to start doing better as the economy recovers, and especially because of its focus in Africa and India?
Well, I think they do need to look at extending their product range. I think that just prepaid sales is not the only way to go, and I think that they've alluded to saying that they will start to increase the amount of products that they're offering. They've been in a difficult situation the last year or two with the recession around the world and the amount of sales that they get in. A very cash generative business, and they generate a lot of cash. But the growth just seems not to be gaining traction. They seem to have plateaued, and I think they'll have to look for new products and extra growth into Africa.
Let's touch on the likes of Growthpoint, also out with results in today's session, and we saw the company out with 10% increase in gross earnings per unit, talking about distribution levels increasing by between 3 and 7%. What is your sense? Again, do you want to be linked to the property sector at this time where you've got benign numbers coming through?
Yeah, relatively flat numbers. I think they're a very big purchase of the V&A waterfront. is a very big acquisition for them, and I think that's going to be a key going forward. Are they going to get the revenues and the growth that they want out of that very big purchase, 9.9 billion rands worth of property in the V&A waterfront? And that's going to be their real key driver. They've also gone into Australia, and I think they've gone in at the right time in Australia, so they start to generate a bit of revenue coming out of Australia. I think you definitely want them in your portfolio. They get good distributions every year and dividends coming through there. So it's something you'll definitely have. The growth in the property sector, I think, will still be under pressure for the next year. Interest rates and world economy under pressure. Banks not lending quite as much as they should be. So I think you'll still have a bit of slow growth there, but in the long term, I think you have to be in the property sector.
Let's just quickly touch on construction companies. Stefanuti Stocks saying that headline earnings per share for the first half could be down by as much as 30%. Do you think that it's time now to get into the construction space, or would you like to see a bit of a recovery on the earnings front first?
I think we need to see a bit of a recovery. I think that governments in general on the infrastructure side are taking their time to start infrastructure projects. I think building as well on a corporate level is relatively benign as well. So I think that you need to see a drop in price in cement sales, a bit of a drop in price in the steel prices, etc., for them to start to get extra margins on the construction that they are doing. So I think you've probably still got 6 months to go until you get into these construction stocks, maybe even 7 to 8 months. So I would still be able to put my money somewhere else before putting them in the construction stock.
Fantastic, Rob. Thank you so much for joining me. Great to have you on the program.